Hey guys, it is Julie here with TipRanks, and today we're taking a look at two high-yield dividend stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at dividend stocks that come in with a strong buy consensus from Wall Street and also have a pretty high dividend yield. So we're going to take a look at these companies, what it is that they do, and of course what those analysts are predicting for the stock's future. Before we get into those, this is your reminder to make sure you've downloaded the TipRanks mobile app by using the links in the description down below so you can stay up to date with all of your favorite research tools on the go. Now let's get right into these high-yield dividend stocks. First up, we're taking a look at ARCC. Their stock trades under the ticker ARCC and is currently priced at $19.52 per share. Over the past year, they are up 11% overall and up a couple percent in the last 3 months. They do currently score a 10 out of 10 on the TipRanks Smart Score. ARCC is a BDC, or Business Development Company. These firms are specialty lenders providing credit and financing services for small and mid-market businesses that wouldn't necessarily qualify with traditional commercial banks. With a market cap of over $11 billion, ARCC is the largest publicly traded BDC in the U.S. market. The portfolio behind their performance is both diverse and well-balanced with a healthy composition of assets. Their top sectors include software and services, healthcare services, and commercial and professional services. They have been paying a dividend since 2004, and that includes their regular quarterly dividend plus the occasional variable special distribution. Their current quarterly dividend is 48 cents per share for an impressive dividend yield of 9.99%. Their next ex-dividend date is on December 14th for payment on December 28th. ARCC did just share their latest quarterly report back on October 24th, where they came out with an earnings beat. For their third quarter, they reported revenue of $576 million and earnings per share of 59 cents came in 1 cent ahead of analyst expectations. And following that earnings report, we've seen several Wall Street analysts reiterating their buy ratings on the stock. It does currently come in as a strong buy with 7 current ratings. With 6 buys and 1 hold, the average price target comes in at $20.93, which would be an upside potential of 7.4% from current prices. And we can see a lot of 5-star analysts weighing in on the stock as well. On the low end, we do have that 1 hold with a downside of 2.66%, and then a ton all at the $21 mark, which would be an upside of over 7.5%, and a high-end price target with an upside of 15%. And our second high-yield dividend stock today is OneMain Holdings. Their stock trades under the ticker OMF and is currently priced at above $36 per share. Now, they've had a lot of ups and downs this year. Overall, in the past year, down 3%, but if you look year to date, up 23%, and down 12% in the last 3 months, so a bit of volatility here. They do currently score an 8 out of 10 on the TipRanks Smart Score. OneMain Holdings is a financial services company with a focus on customers in the subprime banking loan segment. The company offers this demographic a full range of financial services, including personal loans and insurance products designed to make quality banking services available to a customer base that may not qualify from services from more traditional banks. They take care on the front end, vetting their customers and ensuring their screening process keeps the default rate down. OneMain is best known for its online presence, but also maintains an extensive network of physical branch offices of over 1,400 locations across 44 states. OneMain Holdings has just been paying their dividend for a few years, but it is a generous dividend. Their current quarterly dividend comes in at $1 per share for a dividend yield of 10.6%. Their ex-dividend date was November 3rd for payment on today, the 10th, so the next one will be coming up in a few months. And they also had a quarterly earnings beat near the end of October. For their third quarter, they reported revenue of $1.35 billion and earnings per share of $1.57, coming in ahead of estimates and breaking a couple streaks here of having an earnings miss. The company said that they remain well-positioned for the current environment and that their strong balance sheet, superior credit risk management, and new products position them well for the future. And Wall Street analysts seem to agree. The stock currently has 11 current ratings, coming in as a strong buy. That includes 9 buy ratings and 2 holds, with an average price target of $46, which would be an upside potential of over 25%. And once again, plenty of 5-star analysts weighing in on the stock. Looking at our recent ratings here, on the low end we do have a hold, both with upsides of 2.8%, and then a lot in the double digits with a high-end price target of over 48%. So that is a quick look at 2 strong buy, high-yield dividend stocks. Let me know your thoughts on these 2 companies in the comments down below, or what other high-yield companies you love lately. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just providing some insight and entertainment and showing you what those Wall Street analysts are up to. So please make sure you always do your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.